Okay, I'm gonna briefly explain to you the cash flow identity. What is cash flow identity? Okay, I'm gonna start with the basic, the main equation of accounting. The main equation of accounting is total assets, total asset equal to total liabilities plus shareholder equity. Okay. Then the resources of the company are either financed by creditors or financed by the shareholders. Okay. Then what is total asset? We can classify total asset in current assets plus net fixed assets. Okay, we can do that classification. We can simplify total assets in these two types of assets, and we can classify the liabilities in current liabilities plus long-term debt plus current financial liability. Okay, remember that current assets and current liabilities are current assets are those assets uh, that can be liquid in the short run, in 1 month until 3 months or either 6 months. And next, fixed assets are just assets long that last for a longer time. Okay, current liabilities or debt that we gotta pay in the short run, and these two are related to debt. Short-term debt, we can say that this is long-term debt and this is short-term debt. Okay, if I continue now, if I continue with the shareholder equity, you can say that shareholder equity is equal to common stock plus preferred stock plus retained earnings. Okay, this is common stock is the money that the shareholders put when the company started. Preferred stocks is also the money of preferred shareholders that have a priority for the dividends but do not have any vote. Okay, then now if I go in more detail about what is retained earnings, then retained earnings at period T is equal to retained earnings of the previous period, T minus 1. Here T can be 1 quarter or 1 month or 1 year. Okay, then retained earnings is the retained earnings. This is a cumulative retained earnings is equal to the cumulative retained earnings of the last periods plus net income of the period T minus dividends of the time T at time T. Okay, then this is how the company is going to be generating wealth or value every period. The company creates a net income, then out of that net income it decides to pay some money and as dividends for shareholders, and other part is decided to be reinvested in the company and keeping the company. Okay, then now we're gonna explore more about what happened with this creation of wealth with this cash flow identity. Okay, now from here, now I can go in more detail about this, about net income, right? If net income, what is net income? Net income at time T is equal to sales at time T minus cost of goods sold at time T minus sales and general administrative expenses at time T minus depreciation at time T minus interest expenses at time T minus taxes at time T. Okay, now that we have this, now we can I'm gonna stop here, and in the next video I'm gonna show you a more detailed decomposition of this equation. For now I just describe where in more detail total assets, total liabilities, shareholder, and shareholder I went and separated in three components, and then one of these companies retain earnings, and I decompose retain earnings, and further I decomposed net income that is part of retained earnings. Okay, then in the next video I'm going to show you in more detail about this cash flow identity.